Hey guys, hope you're all doing really well. Look, I just wanted to run through an opportunity that did happen on Nasdaq a couple of days ago. But before I do that, I always run through the ICC strategy. So for those that are new, feel free to tune in. But for those that are familiar with the strategy, feel free to skip to the trade opportunity that happened on the Nasdaq. Also, just before I do run through the strategy, just want to get a bit of a understanding for what you guys want to see more of. So feel free to make some comments, and I'll do that. I'm also thinking about putting together a bit more of an A to Z sort of understanding of the strategy, sort of like my first video. That one's called ICC Explained. And I believe I went through a pretty in-depth version from sort of A to Z exactly how the strategy works. So if you guys want something like that, please do let me know, and also hit the thumbs up button if that's something that you do want to see. That would be really good to know. I just want to see if there's anything, perhaps as time has gone on, although the strategy is quite simple, it might be good to just relay everything, just so that maybe over time there may be something that I may have missed. So it might be good to just do a bit of a refresh. So just let me know in the comments section. I'll give the video a thumbs up, and I'll gauge it by that. But let's run through the strategy. So again, those that are new, feel free to tune in. Those that are familiar with the strategy, you can skip this section for the moment, and then we can get into the trade setup that happened on Nasdaq. So what is ICC? So this is a strategy that I've been trading for about 6 months now, and it's been doing really, really well. I've had quite a really good high success rate, a high win rate, if you want to call it. So ICC, it stands for Indication, Correction, and Continuation. It's a trend-based strategy. So that means the market either needs to be in an uptrend or the market needs to be in a downtrend. So first things first, when we're looking to mark up our charts, we want to make sure that we're marking them up on the 4-hour and the 1-hour time frames. That is probably one of the most important aspects. If you can take away from any of this, other than the strategy itself, it's super, super important that you're doing this on the higher time frames, because the higher time frames, you're getting more conviction from bigger players, the banks, the hedge funds, and the confirmation of multiple time frames. When they all move in conjunction with one another, you're getting the bigger moves. So it's really, really important you're marking up on the higher time frames. So the 4-hour and the 1-hour. So let's run through the uptrend example first. So in an uptrend, we want to see the market make, well, generally it will start with a low, then it will high, create a higher low, and then a higher high, higher low, and a higher high. So once we get that higher high phase, we essentially get the first phase. So we've got the low, high, higher low, and the higher high. We've got the first phase now, which is the indication phase. So once a higher high is created, we get an indication. At this point in time, we can draw our level of interest on the previous high. So then what we need to wait for is the second phase, which is the correction phase. So the second phase is when price then breaks below that level of interest that we drew from the previous high. We want to see price not break the previous high or low. That gives us further confirmation that we actually are in an uptrend, because an uptrend consists of higher highs and higher lows. So when price corrects below that level of interest, at this point in time, we want to scale down to the 15-minute and 5-minute time frames to find the characteristics that support the overall trend. So we want to scale down to 5-minute, 15-minute time frame, and we want to look for higher highs and higher lows on that smaller time frame. Once we then see that on the smaller time frame, we then want to see price break above that level of interest, and we want to sort of see that with a bit of velocity. We want to see price break through that level with conviction. And at this point in time, we then look to take an entry, and then we play out the third phase, which is the continuation phase. So the continuation phase, we take an entry at this level of interest. We then put a take profit at the previous higher high, and I personally like to take profit at the halfway point as well. So we've got take profit at the halfway point between the entry and the higher high, and then a take profit excuse me, at the higher high. That is the ultimate target. That is as simple as it is. And now the reverse of that is a downtrend. So when we're basically making lower lows and lower highs. So we start with a high in the market, then a low, creating a lower high. Once we get that lower low, this is the first phase, similar to the uptrend. Once we get that higher high, there's an indication. Once we get that lower low, we've got an indication for the downtrend. Again, very, very important that we're marking this up on the 4-hour and the 1-hour time frame. We want to see this on the 4-hour and 1-hour, and they both have to align. The 4-hour has to be in a downtrend if you're looking for downtrends, and the 1-hour has to be downtrend. Same for an uptrend. Both have to be in an uptrend formation. So back to the downtrend. We've got that indication on the higher time frame, creating the lower low. This point in time, we can draw our level of interest at the previous low here. Perfect. Next phase, we're waiting for the correction. Price then corrects above that level of interest, not breaking previous lower high. We then have further conviction that we are in a downtrend, because if price were to break this previous lower high, that may mean that we could potentially, it could be the end of a downtrend and we might be in an uptrend. Same with the downtrend. If we broke this higher low and breaks this level here, that means that it could be the end of an uptrend. So back to the downtrend. We've got that lower high now. We've done that correction. We then scale down to the 15-minute and 5-minute time frames to find the characteristics that support the overall trend, which is the downtrend. So we're looking for lower lows and lower highs on those smaller time frames. Then once we see that and then price starts breaking below the level of interest, we can then look to take an entry, ultimate target at that lower low for the third phase to play out, which is the continuation phase. So entry at this level of interest here, take profit at the halfway point and that lower low for the continuation phase. That is as simple as it is. So please do let me know if there's any confusion there, or if there's anything that you want me to further clarify. I'm happy to do that. But with this in mind, let's run through what happened on the Nasdaq. So this was, what day is it? Today is Thursday. So that was Wednesday. This was the Thursday, Wednesday, Tuesday night. It was an absolutely perfect trade. So let's basically, with the information that we know of what a downtrend looks like, we know that they're creating lower lows and lower highs. We can then transpose this on this chart here. So very clearly, we can actually see that there's lower highs being created here. So when I saw this, I'm like, wow, price is definitely going to break down. This was the Monday, and it gapped down with heavy conviction. There was actually an opportunity here, but unfortunately, that was during the Asian session, and I don't trade the Asian session. I'm looking to trade the London session and also New York session. So I usually set my alerts. I set my alerts and I set it and I forget it. When I get an alert on my watch, I then look to have a look at my phone quickly. If that happens at midnight, I live in Australia. Generally, 12:30 a.m. is the New York Open. So I basically try and go to sleep like a normal person, and then wait for any alerts if they do occur. Let's run through this example here. So obviously we can see prices making lower lows and lower highs very clearly. We can see that this is the opportunity that happened this week in particular. So let's use the path tool just to sort of gauge an understanding. So we can see there's a high, there's a low, there's a lower high, there's a lower low, lower high, lower low, right? We can very clearly see that. So what we know, So we know that when price actually makes a lower low, so in this example here, we can see there's a high, there's a low, there's a higher low, and there's a lower high and there's a lower low. So just like our drawing, right? We've got the high, the low, the lower high, and the lower low. That's exactly what we have right here. It's the high, the low, the lower high, and the lower low. Once we get that lower low, we can draw our level of interest. It's as simple as that. I draw my level of interest right here, and I have a pre-marking for 4-hour sell, because we're marking this out on the 4-hour time frame. This is the time frame that I always start in, and then I usually scale down from here just to see what the 1 hour looks like. And yeah, we go from there. So perfect. We can see that there's a very clear indication here. Price then corrects before then moving back down again. So we know that the ultimate target is basically somewhere here. So I'll put a little target sign on. Oops. Target. And let's scale down to the 60-minute time frame and just see what that looks like. So very clearly, oops. So we can very clearly see here that this is the indication right here, because remember, we drew this on the higher time frame. We've got the high, we've got the low, we've got the lower high and the lower low. Level of interest is drawn here. So that transposes perfectly. So that actually looks really good on the 4-hour. It also coincides very well on the 1-hour time frame. So this is exactly, I'll just remove this, just we don't need it anymore. So we've got an understanding. So this is the indication, this is the correction, and this is the continuation. Just like our drawing. High, low, lower high, lower low. Indication, correction. We've got the level of interest at the previous low. Price doesn't make any, it doesn't break previous lower high. And that's exactly what happened here. We can see indication, correction, price doesn't break the previous lower high here before then breaking down. So at this point in time, your entry would have been, I'll just now scale down to the 15-minute time frame just to see if we can make any further refinements. Just excuse these levels. And there it is. That's the trade right there. So you can even scale down to the 5-minute time frame just to see what that looks like. And this was absolutely perfect. So this is very clearly the indication here. We can see then price stalls here. Price breaks below, so it's creating higher lows and higher highs. Price then breaks this low here, creating a low, does a pullback before then coming back down before taking off onto the downside. So we can see there's a short position right here. You can put stops up here if you'd like, or if your risk appetite's maybe somewhere at the halfway point. Really depends on what you're willing to risk, and then take profit is all the way down here. So we can see very clearly that we were actually not in really any drawdown at all. So that was a really, really, really nice trade. I think it was something like 700 ticks from memory, and 600 maybe. Let's just see. 500. Yeah, 700 ticks to the bottom. I think I got out here based on the 1-hour time frame, I believe. So that worked out being a really, really good trade. That one also was about 4 o'clock in the morning for me. So I was very lucky to be awake for that. So yeah, that ended up being a really nice trade. That's basically all that has happened so far that I have taken. But let's just have a quick look at the outlooks at the moment, and we can sort of then get a bit of an understanding of where we are and what potentially might happen. So what I always do is when I'm looking at drawing these lower highs and lower lows, or vice versa, I'm looking to see where the push actually initiated. So we can see here that the push initiated for buying here. So I know that this is the starting point. So whenever you're drawing your charts, you just want to use the starting point. So we can very clearly see that price is now breaking above these. previous highs here. So this is now indicating that we actually might be in an uptrend. Now it doesn't mean to say that we can't move back down again, but if you're just looking at most recent price action, we can see that price has broken these highs. So that could mean that if price breaks above this level, so if you're looking at it like this, maybe we can even go down to the 60-minute time frame just to get a bit more of an understanding. We can see there's a low, there's a high, there's a higher low, there's a higher high. Price makes another higher low before creating a higher high. So at this point in time, if you're looking at the 60-minute time frame, you could very clearly see that once we get that higher high, we're then waiting for the correction to then for the continuation to play out. So if we're drawing a level here based on a 1 hour buy, that's essentially what we'd be looking at. So I can then send this to back. So now what I would be doing is I'd be setting an alert at this level here and basically just sitting on my hands. That's as simple as it is. Ideally, what we're then looking for here is we want price to then, so this is the indication, we want price to correct down here. We don't want price to break below these lower low, this higher low. We want price to ideally do something like this before then continuing up. At which point what we can do is we can then take a trade based on an entry here with stop loss below previous swing low and take profit at that higher high. That's really what we're looking for. So it's making more sense on a 1 hour time frame. But let's just have a quick look at the 4 hour just to see if there is potentially anything. So that makes sense for a 1 hour time frame to me at least. So let's have a look at the 4 hour to see if there's any potential setups. Ideally, what we would want here is because we can see price has clearly broken. It's going to take a lot of effort for price to get back below here. So ideally, probably the next spot is probably here. So I would mark that off based on the 4 hour template that I have set. So you can see the way that I distinguish them is quite simple actually. I distinguish them, the 4 hour has the thicker line, but obviously it has this little distinguished symbol which symbolizes anything above this level I'm looking to take buys, which is the same here. The level is thinner on this one, and that signifies the 1 hour level of interest that I'd be looking for. So that's sort of what I'm looking for here. What I would probably do as well is mark an alert right here and essentially just waiting for price to get to those levels. I'm sitting on my hands and waiting for the indication, waiting for the correction, for me to take advantage of the continuation. That's essentially all I'm looking for on the Nasdaq. Now gold has just been running like crazy. Now I was hoping that at one point in time when price came above here that it would actually correct, but gold has just been on a mean run at the moment. It's just absolutely taking off. So it's just been incredibly bullish. So this is sort of what I'm looking for now. Ideally, what I'm now looking for is just some form of indication. So let's just sort of run through this together. So I'll just start from the start just so you can get a bit of understanding. Delete the alerts and we can run through this together. Okay, so starting on the 4 hour time frame, very clearly we're in an uptrend, aren't we? So I'm sort of looking for where buyers and sellers are at the moment. And basically what I want now is here, so above this level here, I essentially want price to break above here to create an indication. And below here, if price breaks below here, 4 hour sell. So these are the two scenarios. Let's just draw this out. So we want price to create an indication. So say for instance, price goes up, we want price to break above here before correcting and then continuing, at which point in time we would take advantage of that by taking a buy trade right here, because we know that this is a higher high. Price then creates a higher low to create a higher high. So we would then know that because this is a higher high, this is the indication, just like this one here. Price is creating higher highs and higher lows. There's the indication. We draw our level of interest in the previous high. Then we come back here. So that's scenario 1. Now, scenario 2 could be the complete opposite. We could see price do something like this and then eventually create an indication before correcting and then continuing down. So the reverse of that is literally this. Just move that out of the way. Something like this. It's not, obviously it's not going to draw exactly perfect. It's not going to look exactly like this, but that's sort of what we're looking for. Those are the two scenarios. So what I'll probably do in this instance, because price actually hasn't even created an indication or anything of that nature, I will be setting alerts and just to see which way price is going to break, really. Have a quick look on the 1 hour time frame, and yeah, it's not really that clean, is it? Like, we can see that price is sort of trying to make further lows, but it's really struggling to push down. So I really wouldn't be surprised if we actually come up and tap this psychological level, which is the 5,000. Yeah, we just have to wait and see. Another thing to keep in mind as well, guys, I have mentioned this in previous videos as well, is to really be mindful of news. News is really, really important, and it's just something to watch out for. So in particular, I use my FX book, and I have it set so that I'm only looking at high impact news for the US, because the US news is what moves the markets, in particular Nasdaq, and it does move gold quite significantly as well. So that's essentially all I'm waiting for. So we've got news in 1 hour and 51 minutes. And then after that, another hour and a half, we've got news again. So there's going to be a lot of movement. So just be really careful about taking trades during a news event, because it can be quite choppy. Price can move one direction really, really quickly and then come back down just as quick, or vice versa. So just something to be really, really mindful of. So at the moment, I'm just going to have my alerts set. Be mindful to probably not take trades on a news event, just because of the nature and how choppy it can be. And simply just wait and sit on my hands. So there's nothing really set up for gold at this stage. I'll be just waiting for an indication and then some form of correction before the continuation can play out. So more than likely, we're going to look to potentially maybe take something on the Nasdaq. So there's something potentially forming here on the 60-minute time frame. But again, I also do have to be mindful that the overall time frame on Nasdaq is actually more bearish than bullish. So I've just got to be really, really careful about taking the right trades. We can see here, as I sort of mentioned before, on the 1 hour time frame, price is making higher highs and higher lows. So if price does do that and then doesn't break this previous low, I will look to take an entry. If we see something like this, I'll just quickly run through it again. So very clearly we can see this is the indication, this is the correction. Price then does something like this before continuing up. So that's sort of what I'll be looking for. Price could very well just keep shooting up and not actually correct, in which case it's not an opportunity I'm interested in. I'm looking for the ICC strategy, and that's as simple as it is. I'm not going to be tempted to take anything less or more. This is what I'm looking for, and this is what I've been trading and what has been working incredibly well, and I can attest to that, and so can many of the other traders that do trade this methodology. It seems really, really simple, and in hindsight, it actually really is. It's very easy to confuse yourself, but I think the thing to keep in mind is trade the higher time frames. That's super, super important. And practice drawing the higher highs and higher lows. Once you get a really firm understanding for that, then just simply play out that strategy. Higher time frame, wait for the indication, wait for the correction on the higher time frames, draw your level of interest, scale down to 15-minute, 5-minute time frame, and look for higher highs and higher lows if it's an uptrend. And that's as simple as it is, guys. I really, really encourage you to watch Trades by Sai videos. He has, he's got a whole course where he runs through each of the segments individually, and then talks about psychology. There's a whole range of things that he does talk about. Again, there's a lot of other people that do this as well, so feel free to watch their videos. But I'm not really fond of anyone else other than Sai at this point in time. If you do like what I'm doing and you like my videos, then yeah, I've got a lot of examples. I've done over 20 videos now of running through examples, running through the strategy each time I do this. So I really hope that just the repetitious nature of watching videos will actually help you sink it in. Don't be in a rush to try and understand everything at once. It is simple, and you'll probably be wondering, wow, is that it? It's that simple. I'm telling you right now, it is that simple. Trend-based strategies are by far one of the most profitable strategies, I'll have to say. I have traded in the past many other strategies, and Sai has as well, and he's gone back to simplicity, and simplicity wins because naturally humans have the tendency to overcomplicate things. So it's very, very important that we sort of get that out of our system for trying to overcomplicate things and go back to bare basics, because the basics actually work. So that's it from me, guys. Again, please do let me know if you want me to run through an A to Z video, sort of like my first video, which is called ICC Explained. You'll be able to see that one. Have a look at that. Let me know if you want me to run through maybe another example. I've got a better microphone now, so you'll be able to hear me a little bit more clearly. And also, I've got clearer charts as well. So, and a bit more of an understanding and some knowledge on that. So, yeah, please do let me know if that's something you're interested in. So if you like this video, guys, please do give it a thumbs up. And if you want to see more content like this, please do hit the subscribe button. I'll do my very best to, listen to or revise your comments and do my best to try and help you where I can. At the end of the day, this is just a tool that I really like to track my journey along the way. And the added benefit is just helping people, which is, it's a really nice thing in the end of the day. And a lot of you guys have been incredibly encouraging and have said that you've had some breakthroughs and basically so that it starts to make sense. And sometimes all it takes is just a different perspective. Sai is a great trader, that he's proven it, but sometimes all it takes is just listening to a different perspective. I'm not really changing anything that Sai teaches. I'm teaching, if not exactly what he does teach. He teaches it just in a different, he interprets things differently, but the strategy is the same. That's all it is. Anyway, guys, I'm rambling. I hope you have a great rest of your week. Look, I'll catch you in the next one. Thanks for your time.